Home prices will drop and cause pain. Today, our lead story is Robert Shiller. Robert Shiller is the co-creator of the Case-Shiller Home Price Index, one of the most widely used indexes for gauging home prices. Now, we've been tracking on this channel what he's been saying for a few years now, but even someone like Shiller hasn't gotten everything correct. I remember mid-2020, he talked about how home prices may decline in some of the bigger cities. That's when we were really starting to see the big city exodus out of the cities with the work at home trend and people moving to more remote areas and more of the states in the middle of the United States. So he hasn't been 100% correct, just like anyone. No one's 100% correct. But we do listen to what he says because he is a very big voice in the housing market as far as analyzing what trends we may be seeing here in the future. Now let's go over to Yahoo Finance, this recent article, Robert Shiller, home prices will fall and cause some pain. First of all, today, Wednesday, May 26th, we had all major indexes in the green. Crude oil up over $66. So more pain for a lot of people living on a budget and the paycheck to paycheck, which is basically most people in the bottom 50% in the United States. All right, but let's get into the home price predictions here by Shiller. Quote from this article, they'll come back down not overnight, but enough to cause some pain, unquote. That was him discussing home prices. Now, last week, the NAR reported that the median home price as of April was $341,600. That's another new record high, and that's up 19% versus April 2020. So a year-over-year gain of 19%. Now, the Case-Shiller Home Price Index is only up 13% year over year, but that only tracks 20 of the biggest cities, 20 major U.S. cities. So actually, some of the smaller cities outperformed the top 20 largest cities when it comes to home price increases. Again, 19% overall from the National Association of Realtors year over year, 13% year over year gains for the 20 largest U.S. cities. So prices certainly didn't fall or correct in those major cities, but they didn't go up as high and as fast year over year as when you look at all the cities in the U.S. Places like Boise, Idaho, for example, up over 30%. We reported on that here on this channel. All right, another quote here out of Robert Shiller, quote, "This is not a market that collapses overnight. It's less short-run volatile than the stock market, but you can see that we're seeing home price increases now that haven't been realized since those years just before the financial crisis," unquote. Now here's where it gets a little bit confusing to me, and here's what Shiller also said, quote, "There's no clean explanation why the housing market is so hot," unquote. Now I don't know why he would say that. There's definitely obvious reasons why the housing market is hot. And I'll just give you a few examples. Rising lumber and record high lumber costs, labor shortages and finding it more difficult for people that want to work for home builders. The panic of the sickness there and people leaving the bigger cities. That was a big surge, a big home buying surge at that time. And the work at home availability. Right. Also, we have near record low interest rates, near 50-year lows. We have banks that have been unleashed from any reserve requirements, so they can loan out endless amounts of money, aka create money out of thin air in unlimited amounts. And we also have the Fed basically jabberjawing the markets, guaranteeing that the Fed will be there no matter what. And in their words, not mine, in the Fed's words, whatever it takes to support the markets. Right? So we have behind it all the Fed jawboning confidence into the markets and into the banks. So again, I'm not sure why Shiller would say there's no clean explanation for this. Maybe he just means that there's no single fact to point at. It's a multitude of different causes as to the hotness, the enormity of these home price gains. Okay, another quote, Robert Shiller, quote, "I think it's some kind of irrational exuberance. People are having fun, and they will as long as home prices keep going up." All right, so let's try to dissect a little bit of what Shiller is saying here. And we have to remember this, no matter how experienced someone is, unless they have inside information on what the Fed's going to do, there's really no way of knowing if his predictions are going to be accurate. For example, mortgage rates could drop even lower. We also have things that are in the background that could actually affect the markets even bigger. We have the first-time homebuyer incentive, part of the rescue package, where first-time homebuyers are going to get an incentive and down payment assistance. We've talked about that here several times. And we can have even bigger programs that roll out to allow people to still bid up these home prices even more. And there's no telling how many different signatures they can sign as far as the lawmakers to keep this housing market propped up. So definitely do your own research on this topic if you're someone looking to buy or sell a home and trying to get a gauge on where home prices are headed. There's really no way to know. Why? Because again, it's a manipulated market. It's controlled by a small group of people making the decisions. Now, the common term that we give to these people is the money printers. And again, we have to point out that it's not a free market. So when you're looking at fundamentals, it really doesn't matter. Incomes doesn't matter. Right? It matters a little bit, but ultimately they could pass a law that says no home can be foreclosed. So even if someone has zero income and they lost their job completely, that home still may not get put on the market if foreclosures are halted. Right? So you can see how these laws, the manipulation, the monetary system, the money printers can really rig a market for who knows how long, maybe forever, maybe all the way into hyperinflation. In just our last report, or maybe 2 reports ago, we talked about how even more disconnected home prices are in Canada when you look at incomes versus home prices. So technically, home prices could double here in America. And again, new laws can be rolled out, more manipulation, more lending, more down payment assistance, just basically more liquidity being thrown at this housing market. And it's interesting when I talk to people about this and when I see some of your comments, some people say that the Fed, they can't just go out and manipulate markets. They can't go out and buy homes. Well, no, of course, they're not buying homes directly, but they're backstopping the way that people buy homes. In most cases, it's borrowing money. So when you backstop the banks, you get more demand. All right, folks, we're going to wrap this one up right here. In other news, we have Amazon links deal to acquire MGM Studios for $8.45 billion. Another case of the mega corporations getting even bigger and more consolidation. Also, we see the 10-year bond still holding below 1.6, and that tells us that mortgage rates are going to continue to stay low for the time being. Will the Fed allow rates to rise? We'll have to see. All right, thanks everybody for watching this report. Let me know what you think, please, about what Robert Shiller says. Will home prices fall and will we see pain? Or is this market going all the way into hyperinflation? Most of you know I'm playing both sides of the fence. I don't want to be caught all in or all out of a possibility as far as what the market's going to do. So I'm kind of straddling the fence. Let me know what you're doing with this housing market and what do you think about Robert Shiller's comments. Thanks everybody for being here. Stay well, stay safe, stay prepared. Keep stacking. Till next time, bye for now. Peace.